Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. Markets look like they were just like yesterday. It is amazing. It doesn't seem like they've changed. It's almost like another, at one point, I guess we were right down here in this area. Let's find our dollar index. We were right down here in this area, and they just brought them back. That's all they did. Nothing major there. In the sense of that same, consistent, markets just don't, I saw an article and I mentioned it, I guess, what's today? Today's Tuesday now. So I mentioned it on, I think Friday of last week, where the S&P 500 has been locked in a 60 point or 65 point range basically over the last 3 weeks. Just locked in that tight range, going nowhere. And we have a meeting coming in on the 13th, the 12th and the 13th of December next week. And the Fed, the Fed chair is going to speak, and they'll make a decision if they're going to raise rates, which obviously they're not doing at the moment. I have a hard time believing that they're going to raise any rates anymore, solely because of the election. We hear forever, the Fed does not like to raise rates or alter rates during the election year. They like to try to leave it alone. And so at this point, 3.5%, 4.5% inflation basically is a lot better than 10% inflation. I guess that's what it comes down to. It's not the 1.4 inflation, or to be exact, it was 1.41 inflation when Mr. Trump left office and Mr. Biden got sworn in. So, we're still like 3 times greater, no matter how you cut it, maybe 4 times greater. But in the end result is that people have gotten not comfortable, just gotten used to the level of inflation. It's going up slower. It's not going down, but it's going up slower. That's all it is. And the media likes to tell us how it's going down. Mr. Biden likes to tell us how the inflation is going down, and it's not. It's not going down. It's going up, but it's going up slower. And to Mr. Biden and his political party, if you get an increase of 10% and it goes down to 5% of an increase, they call that a cut. They call that a reduction, when in fact the rate, it's what they refer to in physics as the rate of change. So the delta has slowed, but it's still the same direction. It's up. It's not down. His political party likes to consider that down. So that's why we have a $34 trillion deficit. They keep on pressing that concept, and it's not obviously working. So anyhow, there's the dollar index. You can see it, a fourth day of a hinky-ashky. Let's see if we can do this right there. You see that fourth day of hinky-ashky in the green. You see the fast is up at 79. The slow is at 69. So it's pressing along. You can see here over on the beta, right there. You see the same thing. It's moving up. It's got 4 days of moving up in green dots. And you can see the histogram moving up. And at the same time, you can see the weekly still on the downside, which it's been down for a while now. We've been in a weekly sell. You can see there that's something like 7 out of the last 8 weeks. Is that what it is? 3, 6, 7. Yep, 7. So it's 8 out of the last 9 weeks. It's been in a weekly sell. That's what it comes down to, and 7 weeks in a row. So that pressure is on the dollar. We're seeing short-term, day-to-day pressure on the upside at the moment. There's a couple of, I guess, general ideas and reasons. Ooh, let's get the chat line up. Sorry about that. Let's get that chat line up. I just realized that it's not up. Let's see. There we are. And there we are. And there is the chat line. And let's see what's going on today. It stopped spinning. Okay, there it goes again. All right, good. There we are. And there is the chat line. We have 5 people watching. And people are slowly moving in at the beginning of this week. And on the chat line, we see Buckus. Nothing. Okay. All right, no problem. So, no one's saying hi. No, yes, maybe, nothing. All right. Yes. So where were we? Oh, yeah. So we're seeing that slow, steady pressure. There was a headline this morning that talked about the idea that a lot of money, the push in November on the equities was more of a matter of fact. Let me see if I can find. I can put the see if we can put that up on there. Uh, let's just go over to the dollar index too on the other chart, and we'll hunt down this chart that I saw this morning, which I thought was interesting. Let's see, where's that at? It's right there. There we are. And there you can see, what is that all about? Let's fix that again. Settings. Let's do this. Move that out of the way. I guess the default is doing it, so let's hit that. Okay, that straightens it out a little bit more. And so you can see here, we've got 3 days here. Oh no, there's the 4th day now. And you can see the weekly, what's that, 3, that's 6 weeks in the sell. And at the same time, let's get rid of that too, right there, remove. There we are. And so let me see if I can find that article. I thought that was very interesting yesterday, the article I saw. It showed that the amount of capital coming into the equity markets in the month of November, and they related to it, which was really curious, is that it matched up to the Fed and the money being released by the Fed. So they kind of credited that the November rally. Let's see, there it is, right there. Close. Let's see if it shows it. Let's see. Let's go back one like that. There we are. There's the headline right there. Let's just show you that to start off with. Right there. I thought this was fascinating. You can see it right there. Behind November's rally, $350 billion in brand new central bank liquidity. Let's see. $350 billion added in November liquidity in U.S. dollar terms from the G4 central banks and the PBOC, the People's Bank of China, was nothing short of a fire hose pouring in. And you can see the chart there, and it measures up to the action itself. So I don't know if you want to call that, like they were balancing it, or they just need to, that's the classic of window dressing. You know what I mean? We talk about window dressing. Boy, is that, that's a predominant window dressing. So, that's, again, we're in that situation where the way that what perks up the markets, well, let's put it this way. If the markets, the S&P 500 has been locked in that range, they've been buying to keep it firm. So they're holding the market up. They want to keep it window dressing. We really, since we can digress here a little bit, and that is that ever since QE, quantitative easing, in 2008, basically throughout the whole Obama years, since the QE, central banks themselves, we know that the Bank of Japan owns over 50% of all the top part of the Nikkei index and the Topex. I guess it's the Topex index, which is the smaller of the two indexes. So you have like the Nikkei, it has, I don't know, a couple hundred, like the S&P, a very large amount of companies. And then you have the Topex, which is like the creme of the la creme, the best of the best, and you're talking about, about 50 stocks, I believe it is, or 25, one or the other. And let's just look up the Topex. And when you see the central banks, let's see, Japan Topex Index, which is like a subset of, where did that go? Let's see, Topex Japan Topex. Let's see what we got here. There we are. How many stocks is that? I think it was. I want to say it's 25, but let's see. The Nikkei is 225, and and I believe the Topex is like 25. I think it's the best of the 225. Let's see if we can get this right there. Here we go. Topex. Let's see. Topex. The TSC. Just a general idea. Let's see. How many shares? How many stocks? I think it's 25 stocks out of the 225. Now they call it the 17. Okay, so they've consolidated. And so the Topex is the best. And supposedly, I've read where the Topex, okay, the Topex is 100 companies. Okay, so I've read where they control over 50% of them. They own the Bank of Japan actually owns over 50%. Sometimes I think I've heard as high as 70% of some of the stocks there. So when you have the Bank of Japan, and it said 4 central banks plus PBOC. We don't know how much the People's Bank of China owns in stocks. In other words, they have almost $1 trillion here parked in U.S. bonds. They could own literally $1 trillion worth of stock too at the same time. That wouldn't, who knows if they have. Imagine if they use the normal investment philosophy of 60-40. So in other words, you have 60% stocks, 40% bonds. Imagine if they ran something like that, even if it was 50-50. You could be talking about $1 trillion almost in American stocks and $1 trillion in U.S. bonds. So that's like window dressing. In other words, they want, you're talking about, especially PBOC. I didn't read the full article. I just saw the chart. But when you have 4 central banks plus, in dollar terms, and the PBOC plowing over $350 billion into the U.S. stock market, I think on the average day, I think there's like, I don't know, 15, something like at the close of the day, they might do $5 billion worth of stock on a closing mark-to-market situation. So in other words, you take a whole month, 30, and you'd multiply it by 5, and there's 150 right there. They did 350 billion. So they could have been propping up the markets, the 4 central banks, and the 5 central banks, including China. And so that's window dressing. That's what that is. They window dressed the stock market up one of the best months in I guess they say the history. It was a monster move. And so since there's quantitative easing now, that opens the doorway for, remember, the New York Stock Exchange and the specialist system and the institutions, mutual funds, hedge funds, so forth. They're nowhere near the dominant player they used to be. The dominant player now is the central bank because they can actually print money and buy stock, and so they can basically support their position, or we like to call it window dressing. In other words, they make it look pretty, but it's just the window. It's not the whole house. And so that's where we stand, and that's kind of unique. It's very unique, and it's very, it takes a whole, I guess I want to say Janos made it very clear. Fundamentals are not what they used to be. It changes the whole complexion of markets in general. And so, we watch currencies, and we watch, metals markets and so forth, and we watch energy markets, and we watch the commodity markets of grains and so forth. But overall, and then we watch the stock market, and the influence of the currencies and the bonds are nowhere near easy to influence as it is in stocks. Stocks, 300. They could trade 350 billion in currencies in like 2 days. Whereas or bonds, it can be done in within like 3 or 4 days. They can be done. Whereas in the stock market, $350 billion is a lot of money being plowed into the stock market, Stock markets are enormously, way smaller than the currency markets and the bond markets. I mean, I'm talking multitudes of time smaller. So, something to think about, traders. And that's why we follow technical analysis way more now than we ever did. I've always followed it more, but that statement right there, behind November's rally, 350 billion in brand new central bank liquidity. Added to in November, liquidity in dollar terms from the G4 central banks plus China, 5 of them, and they refer to it as it was nothing more than just nothing more than a fire hose, just a power blast of running into the stock market. And you can see on the chart here. Let's see if we can make it bigger. You see right there, the the red line represents, I guess, the stock market, and the blue represents the money pouring in. Whereas it had been pouring out, started to pour in. Let's see if we can do that right there, like that. You can see it right there in this chart there. So see if we can get that chart bigger. Can we get that chart bigger? No, they won't give it to us bigger. Okay, so just something to remember, traders, that the markets themselves are being influenced dramatically by the governments themselves, not by mutual funds, not by what do you call it? Retirement funds or hedge funds. The major influence is the central banks. All right, let's get moving along. Let's move away from the dollar index and let's jump into the euro itself. Let's see what the euro looks like this morning. And there is the euro. And you can see the euro has been feeling some pressure on the downside. Let's put it up on the beta. Right there. You see the same situation, some pressure there, opposite of the dollar index itself. And you can see right here, same situation. It's trying to go down to the zero line on our weekly, which is a little surprising. More and more, I didn't think we were going to see as much pressure on the currency pairs in the negative way. I thought that the dollar would be having the pressure, but it just keeps on marching along. It does not let go. It really does not let go. Let's just go back there once. I just want to go and look at the mountaintop bottom. So, pretty much we're above where he saw buying coming in. It bottomed out over the next couple days, and here we are. They're not letting go of it. And the weekly is trying, I'm not sure we'll see weekly buys, but, we don't know. We'll see. The math says right now that it's trying to head in that direction. The daily is showing the strength there. Then we go back to the euro, and you can see that same situation there. What's curious is when we go to the cable, right there, the cable tried to go into the sell yesterday. It was a red and a green, so it didn't make it. And today it's just by a little bit, trying to get back into the buy more. It's still in the buy because it was a red and a green like there, red and a green. We'll see how much buying comes in. It's been very interesting to see the cable showing so much life. Compared to the euro, which seems to be rolling over a little bit, which is a little surprising in its own right. Let's just check it out on our beta, right there. And let's see, where's the beta at? There's the beta. You can see there, 2 days pushing down. The beta is in the sell. It is pushed into the sell. The weekly is trying to push into there. It's still staying up though, very solidly. It seems like the cable and the dollar are gaining from everything else, and everybody else is starting to lose a little strength out of it at the moment. And then we're in the first week of December now, basically. And next week will be the second, and the Fed will be making its statement, and we will be seeing, what that's all about. So from there, we jump over to, where do we jump over to? Euro Turkish Lira. No, we go now to the Swiss itself. Let's check out the Swiss. And the Swiss is still hanging down there. It's still in that sell, which is a good thing. It shows that there's strength in the Swiss. I like to see that. Makes me feel a little bit better when I see a little weakness in the dollar. Really, we here in the States we think the dollar is over. I think the dollar is overvalued. Some longtime currency traders say the same thing. We're much more comfortable when it's in the 90s. We'd like to see it discounted. First sip of the tea of the morning. How about that? After 21 minutes of talking. All right, and so there's the Swiss, and then from there we get over to excuse me. Then we shoot over to the Japanese yen. Right there. There's the yen, and you can see it, popped into the buy yesterday, and it's trying to roll completely back over into the sell. We've got a green and a red, and it's underneath the zero line, and we're in the weekly sell. So, the pressure is somewhere down, which is nice. We're glad to see that the pressure is like that on it right now. We want that to be like that. And we're starting to see the first looks of, the action in Japan in a very positive way, not a negative. They seem to have gotten past the political issues they had to deal with, and now they are, they're dealing with, growth, the old fundamentals. They're trying to advance, how they can adjust, the downstreaming of the corporations. That's the biggest thing of all. That's really the biggest thing of all, is that they're trying to find ways to grow again. Japan has been kind of pulling back over the last 30 years, not growing, and it's nice to see them at least trying to turn the corner, Then from there we go over to the great experiment. We go from the yen, we go over to the Turkish lira. See what the Turkish lira looks like. Oh, not there. Close. Let's just go to the window. There we go. And there's the Turkish lira right underneath it. And you can see that wild spike up to the 33 area. We don't really see that on the J4X, so we think somebody got bamboozled here in the States more than anything else. Notice they got tricked. There it is right there. You don't see anything like spiked all the way up, no line or anything like that. When we turn off the hinky ASCII, you still don't see any major spike. So, whoever got robbed. That's pretty much what it comes down to. Oop, there we are again. No. We want that to go on. There we are. Cancel. There it is. It's back on, I think. There we go. And so, the Turkish lira, it's 4 days in a daily sell. It's stopped closing at all-time highs. That's good. The weekly buy doesn't seem to let go. It's the green line is just piercing the manifold on the plus side. That's about it. Even the fast algo is just barely getting into the minus. It could bounce off of that by the end of the week. They're like I said, the marketplace is watching to see what they do next week. So we could have another. We do one big number. I guess the employment numbers start to come out. ADP and then the normal weekly one, and then we have the Friday one. That's going to be what is that? That's the Friday one is. Trying to think what that is. The Friday one is. Let's get this together. Is the monthly one for November. So we'll see what that employment's doing. We know that there's enormous amounts of employment increases through government hiring. We're not seeing private sector hiring. We're seeing government hiring. They're spending the COVID money that they've stashed away. They've stashed like about $1.25 trillion on the side, the Democrats, and they keep on spending it in the government. And they're having problems freeing it up now that the Republicans control the checkbook. And they keep on crying, they're going to close the government down and hurt everybody. They're not. But, that's the song they sing, and we wait and see how it all plays out. 5 minutes later, another tea after 21 minutes of no tea. There we are. Excuse me on my drinking of the tea. All right, so that's the Turkish lira. Let's go over to the brick. Top brick in the world, South African rand. It has that upwardly projection, and then we go and look at the gold. And there it is. We're going to show you gold on right there. We're going to put South African rand up on J4X. Right there. You see that upwardly move that's been going on. It's been kind of bouncing up. What's fascinating is gold kept on climbing anyway, instead of going down. And then they had this massive, crazy spike yesterday that it started off Sunday night, where they took gold way, way up. Show it on both charts. Right there. You see that big, giant spike. And you can see it on the beta, same situation. And we are in a weekly buy now for 3 weeks. And we went into the sell yesterday. And we are in pressing on it again as we speak. And then that's usually with South African dollar rand pairs trade. It lifting like this normally sends the metals contract down. Surprised that it's past this. Where is it at? Right there, 1950. Honestly, I'm really surprised that it did it. But they went up to all-time highs. Had what was really funny yesterday out of it all was that it happened late Sunday night into the the pre-markets of everybody getting moving along. Asia started. They lifted them big time in Asia. By the time London opened up and Frankfurt and Switzerland and Amsterdam and Milan and all the exchanges in Spain and so forth, they had already sold it down. So every reporter on the TV was telling us how it's at all-time highs, and then when they would put it up on the screen, it showed to be down $3. So a lot of these talking heads are not really paying attention to what they're saying, and they're not looking at the charts. And they went, well, it's down at the moment, but it was at all-time highs just a few hours ago. And they weren't saying it's down like $90 now. You're acting like it was only down like $2 from all-time highs, when in fact it was down something crazy like $90. So that went on all day long, and even going to the close, talking heads on these financial shows would say, and gold is at all-time highs, and then it's down like $20. And then they go, oh, but at the moment it's down $20. And it wasn't $20 off at that point. It was like $135 off the all-time highs, as you can see right here. Right there, these last 3 days. And you can see, it had blown to all-time highs here. And you can see that the close of, let's see, where's it at? Oop, let's do that again. And as you can see right here, the close was at 20,071, and it was trading at 20,024. So that is 46, almost 47 points down for the day. And so, that really messed with them, because they were trying to tell everybody that gold is at all-time highs, when in fact it just happened in the Asian hours. Now today you can see it's up a little bit, just a little bit. And so that's where we stand with the metals complex there. And same thing with, and you know what that is? We haven't changed our gold, so that's the December contract. We're not reflecting the right now we're using February. So February is right there on the old platform. I need to switch that. I forgot to say that. And we have the same situation in silver. Silver. Oh, I want to save this too. Let me do that. There we are. There we are. And there's silver, same situation. Spiked up Sunday night, jumped over the $26 area, and here we are trading at $24.76. So we went up to $26.41, and now we are at the moment, today's low is 24.62. So we're talking there of a dollar 80. Yeah, $1.80 down, almost $2 down on the silver, feeling that same pressure. And we saw copper do the same exact thing, coming out of last night's action. By the end of the day yesterday, copper, right there, March copper found a way to be down for the day also in a daily sell right there. And today it's joining in even more. There's a lot of issues. When we look at copper, we always think of China, because China is a major player in the copper market. And, with all the construction and so forth. And so we don't, we don't think of China when we look at silver or gold. They're buying. Matter of fact, last month they were the biggest buyer in the world of gold. They took in a lot of gold last month, and and maybe that's part of the marking of the mark. Maybe we've been watching them mark gold up, and the rally. Didn't really think about it until I just, in my head, realized that we just had a conversation about the 5 central banks, including China, painting the tape basically for the month of November. And what do we see here when we look at gold? To a great extent, gold started off around the 2000 area and drifted up to like 265.70, and then in Asian hours they painted the tape up to 2130. I think over here it's like 2131 or something like that on the other chart. And so in many ways we've been seeing the month of November a painting of the tape. And this is that time of the year where they do that. Now, I would imagine that tells us that there is a floor in the market. Now, the question is, what happens in January? We're starting to get to that point where money is trying to think, what are they going to do for next year? Are they going to let it fall? I kind of doubt it because there's an election. At the same time, we see the central banks and of the world, the major central banks of the world, basically painting the tape. So that's a really eye opener. You know what I mean? It's a real big eye opener. And so there's not much more you can say about anything like that, but that fact, and it doesn't let go. And I don't see any other way to look at it but that at this point. All right, from the copper, we go over to the platinum, and platinum, which was very fascinating throughout that whole month. They tried to really sink that thing. I don't know, maybe they were doing a big pairs trade. So you can see here that they did not take out, they barely took out the highs. There it is, back 2 days before the end. They took the highs out for the whole month of platinum. That was it. And now it's flirting with the weekly sell as we speak. Right there, we'll put the little circle in. And the slow algorithm is even below the number, more than the fast. And you can see a couple days in the sell here. And, I don't, it's making me think, when we see, there's not a lot of visibility of what these central banks do. There's not a lot of visibility by what the governments are doing. You just see the after effect in price. And it makes you wonder. Remember, I was really confused what was going on with platinum when they were running, gold up. And could it be, more than anything else, is that they're selling platinum short to hedge their gold and their silver? And since platinum is a much smaller market, we've seen the historic platinum trade at all-time lows against gold. And I guess it would be interesting to see, but notice how we find silver cannot seem to get over the $26 area without getting punished every time. Robin and I talk about it, and it's like we shake our heads. It's like, what is the problem? Why isn't it not trading in the 35s or the 40s when you have gold trading on no more than 10% away from all-time highs or 5%? The all-time high in silver is like $51. And so if the 10% of that would be $45. So discount that. Why not $35? How come it can't even do that? It can't even get more than 50% away. That's as much as it can do. It's 50% off its all-time high. And we see platinum. Platinum is at least 100% off its all-time highs. And probably even more than that. Probably it could be as much as 200% off its all-time highs. So they must be selling the silver. They must be selling the platinum, and the platinum is a small market. So that kind of tells us something, is that they're buying gold and selling the other metals to hedge themselves. Problem is that platinum has seen it. We've seen platinum. It'd be one thing if platinum is being shorted at $16 or $17 or $1,800, but we're seeing platinum being shorted in the $850 area, the $900 area. I mean, it's freaky. It is mentally freaky to try to understand this action we see in the platinum. And people, when you go to buy platinum physically, it's expensive, but when it goes to the futures market, it's discounted by almost over 100% to gold, which is an incredible number. It's under $1,000, and gold is trading at $2,000. So it is a strange thing. We see the South African rand trying to press up, and we do not see that same action when it comes to gold, which is the real tell right there. That upwardly projection we've seen now for the whole month. And then the insane spike right there. I mean, it's starting to look like the Turkish lira in some ways. It's weird. All right. From there, we slide over to the Canadian dollar. Let's see what the Canadian's doing today. And that's another one that's kind of drifted away from its normal pattern. It wasn't perfect like the South African rand, but the rand, unfortunately, doesn't make any sense anymore either. And you can see here, the Canadian dollar has been moving down, which normally means that oil prices are moving up, but we're not seeing that in the oil sector. Let's put Brent up on let's do this. We'll go with the West Texas Intermediate right there, and you see it looks like the Canadian dollar, which is usually they work in opposite directions. I mean, there's sometimes where they're working along together, but overall, when you look on a week-over-week charts, usually they have the opposite direction. Not now. We're not seeing that whatsoever. We're seeing the opposite of that. Like that. And so let me just double check to make sure I did that right again. Too many C's right there. There we go. Crude one. There we go. So, here we are trading at $72.69 in West Texas Intermediate. Over on our beta, we're going to throw up the Brent right there. That's January Brent. Where's the mouse at? There it is. And Brent, what's really curious is the Brent did the same crazy spike. Is that really? No, that doesn't make BZF. What is up with this? Let's try this. Like that, and then go like that. Brent is not updating. I'm not sure why Brent is not updating. Let's see if we can put it up on J4X. Right there. Brent's trading at 77.72. They're just not doing the Brent, and that's January contract, so they should be, doing it, but they're not. And we can see, let's see what crude oil does here. We'll put the crude up on there. There's platinum. There's crude. There we go. And there on the beta right there, you can see that's crude oil looking the same way Brent is, with a pressure on the downside. And Canadian pressure, it's gaining. So when we see Canadian gain against the dollar, normally we see a gain in energy contracts, and we're not seeing that either. So we may be going through this enormous window dressing going on right now. It may be the most powerful, most exotic window dressing we've ever seen in a end of the year situation. I mean, we've seen some strange things over the years with window dressing, but this is the weirdest. This is the most exotic. All right. So from there, we go to natural gas, and there is natural gas. January on the let's do this. We'll put natural gas right there. See that pressure on the downside? That's American natural gas. See the same situation on the beta. And we were mentioning over the last couple of days, I think it was yesterday I started to pay attention to it. They were saying that over 20% of Russian natural gas sent to Europe is being resold and shipped out of Europe. I don't understand that one at all. But things are weird as it is, and sometimes you just have to let the weird be the weird and not try to figure it out any more than, there's nothing else to be said about that. That's the strangest thing of all. And there is the contract there. You can see that same thing. We're marching down into the 270-ish area. Yesterday's low, I think, broke the 270 going to 260. Yes, the low yesterday was $2.64.90. Now we go over to the right there, and this is the natural gas company in Europe, in Spain, and it's running at the highs. It's almost heading for 28. And I know that there's this massive freeze at the moment going on in Europe, but it is definitely one of the stranger things. So. What do we got here? Okay. So that is the action we're seeing in the world markets, and they are painting the tape. That's without a doubt, and it's being done from central bank level. So in other words, they have as much capital as they need to go do what they have to do. That is part of the strange thing there. All right, and so we got that. Let's just show you the natural gas company in Europe. Right there. Whoop. Nope, not there. Just missed it by the hair. There. Yeah. Yeah, you can see that right there. And so you can see, the pressure. I did see if I can find that article. There was an article in. Let's see if we can find it. Let's put what we have. We have the natural gas there. Now that's gold. Okay, let's move over to there for a second. I want to find the article. There's an article about the weather in Europe that's been getting. I'm not sure if they're talking about it, but you would have to assume when I see the energy company from Spain, you would have to assume that that's what's happening there, is that the pressure is on because of abnormally cold weather. I mean, I would imagine that's what it's all about in the end. So we'll go there and we will look it up because I want to find that article, and I think it's well worth looking at. I didn't read it. I just copied it and sent it out. Now, nothing more than that. Just in case I needed it, I share things on my Facebook wall, just because I want to be able to access it again. And so it was a picture of Europe with all this ice and snow and everything else going on in Europe, because they're talking about global warming, and we're seeing colder temperatures across the planet for the last 100 years. So it's definitely, there it is right there. Here's the article. Europe in deep freeze as Kerry warns of rampant global warming. Yeah, see, that's what the problem is that there is no reality anymore. There's no science to any of the things they talk about. And there's the article right there. And The world would end in 1984, then 1990, 2000, 2008, 214, now 230. This year was the hottest year in human history that we measured. If we can't hear Mother Nature and can't judge, this is John Kerry saying this. John Kerry speaking at the climate conference in Dubai a couple days ago. And it's all politics. Europe hasn't seen a snow cover like this since 2010. 60% is blanketed in white. All right. Well, we're coming out of Latvia, so everybody must be seeing that. I would assume they're seeing it. This private jet got frozen as it was taking off. Wow. And in reality, it froze on a runway in Munich and tipped backwards after more than 40 centimeters. 16 inches of snow fell overnight on Friday. Okay. It says here what Munich airport traffic usually looks like on a Saturday afternoon compared to today at the airport has closed due to heavy snowfall. So, I guess the media doesn't want to play this up because they're trying to convince everybody that there's a global warming thing going on, which I keep on seeing the stats from NASA. In the United States, NASA keeps on showing that we are at a historic, a 100-year low in temperature, not high. So they take these things and they fudge them. It's amazing. So it says quite extraordinary November cold today in northernmost Europe. High temperatures of 30 minus Celsius. At Sala, located in Finland, Lapland, absolutely brutal cold must be at near record levels for early official winter. Has not yet started in northern hemisphere. Ugh. Woof. Woof. That's cold. Definitely cold. So, only the people listening to this can tell me if it's the truth. Is the story real or is it fake? That's the odd part out of it all. Here's something interesting. Cold air contained, cold air moves south. Yeah, look at that. So, we're seeing a lot of chill going on. All right. So, only you out there across the planet can tell us the truth. And at this point, our market, our media has no interest in marketing that idea whatsoever. They want global warming to be the thing. All right. From there, we go over to what do we go over to? How about the indices? Let's take a look at the Dow Jones Industrial Average right there. You see that trading around the high still. It's awful hard to believe they're going to sell down. Look at that November move from 34,000 up to 36,500 type of thing. Excuse me. So, is that? Let's see. So that's December 4th. Yeah. So basically, we're looking at nice high territory in the stock indices. At the same time, you can see Bitcoin. We're going to jump over to Bitcoin. You can see Bitcoin doing the same thing, still climbing. Going into the was it about 43,000 area, something like that? Yeah, 42,000 area. It brings out the ones who believe we're going to see like $1 million Bitcoin. And maybe we will one day, but I have a hard time believing it'll be over the next 6 months. And so, that would be a meteoric rise. No doubt that the cryptos did their catch up, going from zero up. We've seen that happen many times in different areas. We've seen the same thing happen to the Home Shopping Network, do the same exact thing back in the 80s. Go from literally pennies up to like $200 a share in a matter of weeks, doing the same explosive type action. And so you can see here that long weekly buy for 9 solid weeks. And then we go over to the S&P 500, right, where's it at? Right there. Same situation. I would think more than anything else is that the support would be between 4,500 or 4,500 and 4,600. And as you can see from, I guess like right here, since November 12th, we've kind of basically hung out. Let's see if we can redo this. Let's redo that one more time. So we can see from here, for the last 3 weeks, the product stayed in the 20s, or the teens, I guess you could say, teens, hung out, did explode on the 1st to above 46,000, 4,600, I'm sorry, and backed off the next day on Monday. And I don't think it closed at 4,600. I think it closed lower. Let's just go take a look. I'm not sure why it's showing that. Yeah, see, Friday. Oh, maybe it did. Yeah, it did. On Friday, it closed at 46. That's right, it did. It closed at 4,604. So that's right. I remember that now because I had options that expired. It was good. You know, short option spreads. And so you can see here they're putting a little pressure on it today on the stock market itself. Just a little bit. But again, when you have that much central bank painting of the tape, what stops them from doing it again this month? You know? There's no reason to believe that they're just going to stop for November. You have tax selling this time of the year right now. So all they're trying to do is compensate for the tax selling and then let it, when at the end of next week, going into the week of Christmas, the last 2 weeks of the month, markets get very slow and don't usually go anywhere. So they just know they have to prop it up for another week and a half and then it's done. And so I think that's where we're really at, is that they've painted the tape and they're not letting go. And we know that there's a lot of equity being parked on the sides, like the gold and the stocks and the bonds and so forth. And again, we cannot tell how things are any other way but through price action. In other words, how the markets trade and close and so forth. So, alrighty, from there, what do we got to say? I guess that's pretty much, we're kind of down to the end of the road here. Anybody have any questions out there? It's been a quiet day, and we will have to come up with a title and so forth. But the bigger question is, it's been the central bank's paint tape. I think that's how we're going to portray it. Central bank's paint November tape. I think that's the best way to describe it. We'll see. Give anybody a chance to be able to ask a question, and then we're going to get out of here. Yep. And so what else can we say about this month? And that is that, the tax selling did happen in the sense that because of the NASDAQ, the way they sold down the Magnificent Seven and so forth. People tried to lock in some. I mean, there were some 170% gains, 200% gains. I think Nevada was 300% gains. So I mean, if you make money, you got to take profits. You can't just, let them fly. All right, traders, we're going to get out of here since there's no questions. So this is Doc from North America. We will catch you all tomorrow, same time, same channel, and this will be Happy to Hump Day tomorrow. It will be Wednesday already. So happy trails to you until we meet again, which will be tomorrow. Happy trails to you. To all our trading friends. Later, traders.